What is up, guys? Bitcoin is back at $27,500, which is awesome because it was as low as in the 15,000s just a couple of months ago. Times are changing really quick, and I want to make this video because we're about to get a major breakthrough on the weekly chart. So even though it's Saturday, we're still waiting for that confirmation on Monday. I want to make this video, walk you through a whole bunch of charts on weekly time frames, because if we're about to get this, we could be looking at multiple months potentially of upside and a lot higher targets in the next few months later this year. So grab yourself your favorite beverage. Let's dive into the charts. By the way, if you enjoy these updates and you're not yet subscribed to the channel, click the subscribe button down below, smash the like button, turn it blue, and let's get into this. So what we have here in front of us is the weekly chart of Bitcoin. Every single candle here represents 1 week worth of trading data. In the blue here, the moving average is the 50 simple moving average. And as you can see, look at the size of this big green candle. Now I know we still have just over 36 hours to go before we actually get a close. So in theory, if the whole market nukes, this candle would not be green anymore. But I think that's pretty unlikely. Hopefully, fingers crossed. And this just looks incredibly bullish. So you can see how we got this major rally here in starting from January. And earlier this year, I made a video on the channel about 2 months ago now, where we got a confirmation of the 3-day 50 moving average that was around about over here at around 19,000. And that was the first bullish sign. Okay, we got a reclaim of that. That was already showing potential for bigger upside. But this is the ultimate boss. Getting above this 50-week moving average, that is when the major bull markets or the upside parabolic moves have the chance to happen. You can see over here, 2017, major parabolic move once the price was above the 50. Even in 2019, while it didn't quite get as high as we'd have liked it to, it hit the Fibonacci golden pocket. I'll show you that in a second. But you can see that was still a major move from 5,800 to 13,800. That's more than a 2x. Over here, of course, after the March 2020 sell-off, we got above it, 8,900, and obviously that went to 69,000, as you may remember. Now, for the first time, we got this big green candle. We did get a bit of a fake out here in March or April of 2022, and that was a fake move. But you can see this is different. We've had the whole bottom, we had the bullish divergence here on this whole FTX collapse. We had a bounce back up to it, a quick retest. This was actually a retest of the 3-day 50 moving average, and now we are blasting through it. So we'll know on Monday, obviously, if we got this candle close. It's looking good, but let's assume that we do. At this point, we have to assume, let me draw these annotations, that things are starting to look very bullish. You can see over here, got this red arrow over here in 2019, and we might still be operating here under the assumption that 2019 is the same as what is happening now in 2023, the 4-year cycle, potentially, okay? Maybe we front run the halving bull market and we just continue going up for the next 12 months, get a crazy bull market that nobody is expecting, and then crash right after the halving along with global financial markets. Who knows? That's something that we take one step at a time. For now, my initial idea would be, let's assume that 2019 is like 2023. I said this towards the beginning of the year, and so far it is playing out that way. We have gotten the reclaim now of the 50-week moving average, just as we did there. And you can see we got that continuation. Over here, we got that same reclaim. We got it in April of 2019. And then we went on a massive run up to the Fibonacci golden pocket. So the 0.618 to 0.65 Fibonacci retracements of the whole bear market move. You can see it went exactly to that level. And it went pretty much up there by the end of June. Okay, so now we're looking at a similar date, very similar to 2019, a little bit earlier. I mean, we're towards the end of March now that we got this reclaim, very similar. And if we are looking at the Fibonacci golden pocket, which is simply the retrace of the entire bear market move, that is currently sitting between 48,500 and 50,700. So that is obviously a lot higher, and it seems crazy, but percentage-wise, it is the same retracement of the move. We got the same reclaim over here. Potentially things are looking bullish. We have to see what the FOMC decision is going to be, what the Fed is going to say. Now on Wednesday, on the 22nd, they're going to come out. If that is going to be good, and they are basically going to say we'll see. But they're going to say if they're going to bail out the banks, they're not going to let any banks fail. If they're going to put a halt on interest rate hikes, or maybe they're going to slow down, or maybe they're going to talk about pausing. Who knows? But if there is any talks about that, and potentially quantitative easing, new injections of money into the system, we could see a massive, massive rally, not only in stock markets, but also in the crypto markets. And I will show you in a second the stock markets. I will show you the dollar index on the weekly charts and how that is all looking. So 2019 equals 2023. That is the potential first scenario I'm leaning towards. And that would mean, if this repeats, that by June of this year, we could be looking at high $40,000 Bitcoin. We'll end up knowing, we can look back on this in 3 months from now and see if that happens. I mean, it would be pretty fantastic. And at that point, we're going to have to go and see, are we repeating 2019 where we pause and we stall and we come all the way back down? If we hit that, okay, obviously we have to hit it first, but then we see, does it come back? Is it topping here? Is everything going to crash? Or do we continue to blast through it? Do we go to new all-time highs beyond this? And does that continue till past the halving? The halving is in April next year. And then maybe we continue to April or May, sell in May, go away of 2024. Maybe we get a massive bull market. We go past 70,000 within the next year and a half. Nobody's expecting it. Everyone's sidelined because they're thinking, oh, this is just a scam rally, bear market rally, whatever. It's going to come back down. The macro is so bad. People tell me that all the time. I'm saying, since the beginning of the year, I've been saying, once we get the 3-day 50 moving average, we're bullish. Reclaim the 50-week moving average, and it's super bullish. And people tell me, no, it's not possible. You're wrong. The macro conditions, there's a recession. People don't have money. But in the meantime, look what the chart is doing. The chart leads the way. The news, the macro conditions, all of that does not mean anything. It's not the retail investors who are creating this rally. Okay, it's not millions of people who are all going to buy $500 or $1,000 worth of Bitcoin. That is not what is creating this pump. These pumps are created by the whales, by the smart money, maybe by the institutions, the market makers, the exchanges, all that money that is there already that starts to flow into the markets. And as the price moves higher and higher, that is the markup phase after the accumulation. If we're looking at the Wyckoff schematic, the markup phase, as it starts moving higher and higher, only retail starts to get involved towards the end. They become the exit liquidity for the most part. Obviously, if you guys are following the channel, you've been in the space for quite a few years, you will know you want to buy during the extreme fear and you want to sell. That at the peak euphoria, that is what the smart money does. So right now, the average person is still not really buying, but they're going to get interested when Bitcoin gets back to $50, $60, $70, $80, $90,000, and people will pay those extreme premiums for Bitcoin and other coins when there is insane euphoria. That is the time when you should be looking to sell, when smart money is looking to distribute, just like they did over here during May 2021 and November of 2021. That's going to happen again. So I just wanted to clarify that this is not retail that is causing this. So regardless of there being a recession, people being broke, not having money, all that kind of stuff, that doesn't matter. The market makers can move the market higher, and as it continues to go higher, retail starts to pour money in, which accelerates and pushes it up until we get broad euphoria. It's everywhere on the news again, media headlines. Bitcoin is going to $1 million, etc., whenever it hits new all-time highs. And then, the average person is just taking all their savings and putting it into crypto because they think it's going to go up. But in reality, the entire bull market has already happened, and they're getting in near the top, and the smart money is selling to the dumb money. Okay, that is how these cycles work. So, getting a bit ahead of myself, but that's where we're going towards, potentially. Now, this is a very good sign, level to level. First, we had the 3-day 50 moving average at the beginning of the year. Now we have the 50-week moving average. That is potentially very bullish. Now, what I've added here is the 200-week moving average, and you can see we are also back above that. This was support all the way along for many, many years until we broke below it last bear market. We got below it for quite a few weeks, and it was not looking good. But you can see this candle just smashed through both the 50 and the 200-week moving average. We will know on Monday if we get that confirmation there. And that is pretty much major bull market territory because you can see, like I said, the major parabolic moves happen when the price is both above the 200 and the 50-week moving average, which it is looking like right now. So far, things are looking great. My invalidation right now would be about 22,000. If we get back a weekly close below the 50-week moving average, we have to start considering a potential bearish scenario and bearish continuation. As long as we're above these averages now, we are good to go. And the trend is long until wrong, in my opinion, with potentially 32,000 over here as the first initial target, and then potentially the Fibonacci golden pocket within the next weeks or months. We will see. Let's look back on this in 3 months and see what happens. Now, I want to walk you through some stock market charts and the dollar index to help give more confidence to this idea of bullish continuation here on crypto. So real quick, before we look at the stock market charts, one thing that is happening right now could potentially also be a massively bullish catalyst for Bitcoin. We are seeing the insolvency of banks. Okay, we've seen Silicon Valley Bank, we've seen Silvergate Bank, First Republic Bank that are now either crashing, going under, insolvency, receivership, or just mass panic. We're seeing tons of bank stocks that are massively being sold off. And you can see we're in a situation now here where 186 banks have found to have similar risks as Silicon Valley banks. People are starting to catch on to the fact that banks are based on fractional reserve banking. They don't have the deposits, they don't have everyone's money. So if there is fear, if there is panic, and everyone rushes in to withdraw their money, which these days can be done with a phone, you can just wire it out of the bank. If they don't have the funds available, if it's invested in treasuries or other risky assets, if it's loaned out and the funds aren't there, it can create a bank run, it can create a lot of panic and contagion. Now, basically, that is how the banking system works, and thanks to social media and what we're seeing now happened with those 3 banks I just mentioned, people are starting to catch on to the fact that, hey, maybe my money isn't safe in the bank and maybe I want to take it out. Now, it's getting harder and harder to actually get money into crypto in certain ways thanks to the failures of these banks, thanks to removing banking partners with exchanges, etc., etc. But of course, just logically speaking, if you have cash in a bank and it's a significant amount of savings and you're not sure where to keep that money, or you don't want to take that risk, maybe you're going to take a portion of that and put it into something else like gold and silver, that you can hold in your hands, or maybe Bitcoin. Because if you go back and actually read the white paper, hopefully you've done that at this point, but read the Bitcoin white paper, why it was invented. Bitcoin was created after the 2008 crisis where the banks all crashed and went under and lots of people lost money, to be a form of sound money that can't be messed with. Okay, there's no one party that can print more Bitcoin or confiscate it or seize it. If you own your Bitcoin in a wallet you can control, don't keep your Bitcoin on exchanges, keep it in a hardware wallet like a Trezor or a Ledger. If you have that Bitcoin, it's hard money, it's scarce. Okay, it's all available, it's transparent, it's public. So more and more people are starting to understand Bitcoin and starting to take some money and put that into Bitcoin. In fact, the number of addresses with holding at least 1 Bitcoin has been growing even throughout the bear market. You can see I'll put this chart here on the screen as I'm talking about it, which means that more and more people are opting to buy at least 1 Bitcoin throughout this process. And obviously that there will only ever be 21 million Bitcoin. So at some point, there's not going to be enough supply left, which means the price has to go massively up. And if there's enough fear in these banking contagion, right? If there is fear or there is really a collapse of banks and a bank run and so on and so forth, more and more people are going to want to safeguard their money, and they might just opt to put some of that into Bitcoin. And we can see as a result potentially an enormous run in Bitcoin, even when the banking system is potentially collapsing, as a flight to safety. Now, I don't know if that's going to happen, but that is a potential narrative that is here, and you have to be aware of the fact that that is why Bitcoin was created in the first place after the 2008 crash. So a banking crisis, if they allow that to play out, they're saying they're not going to let banks fail and let depositors lose their money, but let's see, over the coming months what is going to happen. Maybe it only happens next year, like I said. Maybe if we first go higher, who knows? But that is something to keep in the back of your mind. If enough people start to think, hey, maybe I should own a Bitcoin because the banks aren't as safe as I'd like them to be, it only takes a few million people to each buy 1 Bitcoin and there's no more supply left, right? So things can get very interesting very, very quickly. All right, so let's start out by looking at the dollar index, because there is an inverse correlation between the dollar index and Bitcoin and crypto and the stock market. So basically, when the dollar index goes down, crypto and the stock markets tend to go up. And when the dollar index goes up, vice versa, right? So I've made a video about this before. I will link to it up here and in the description down below, where I go into that in detail. But basically, we are in a situation now, this is the weekly chart, 50 moving average in blue. When we get below the 50 moving average, we had our 2017 bull market and our 2020 bull market. We got below it over here, we had a nice run, we had a correction, but as you can see, it retested the 50-week moving average from below, which could be seen as a bearish retest, that we get continuation to the downside on the dollar index, which would mean continuation to the upside in crypto and in the stock markets too. And that is another way of looking at what I just described earlier in this video, with the potential of upside continuation for Bitcoin in the coming weeks and months, potentially up to the Fibonacci golden pocket 48,000. If the dollar index continues down, that is much more likely to continue to happen. So keep an eye on the dollar index, set some alerts at this point in time. You know, we want to see the dollar index stay below 105.8, not get a weekly close back above there. As long as it continues going lower, the upside pressure towards Bitcoin, crypto, and the stock markets is going to be there, and that is likely how that is going to work. Let's have a look at some of the stock markets. So let's start out over here with the S&P 500. This is again a weekly chart, the 50 simple moving average in blue, the 200 simple moving average in red. As you can see, we want to stay above the 200 maximum. Getting below there would be a 2008 style scenario, or 2001, where we have a major crash in financial markets. As long as we're above there, as we have been basically since 2011, with the exception of a quick wick below it with the March 2020 Black Swan event, we've stayed above here. Now getting back above the 50, as you can see above the blue, that is super bullish territory, and every time we do that, we tend to make new highs. That has been the case over here for the last almost more than 10 years, okay, so more than a decade. So right now we're in a situation where we had the 2022 bear market and we dropped all the way back to the 200. It bounced, it got slightly back above the 50, and now we're in this little situation here where we're just below the 50 but also above the 200. So in my opinion, it's going to be key to keep an eye on this 200. If we get weekly closes below there, things start to look bad, we'll have to reassess, but then we potentially run the risk of a 2008 style crash. As long as we stay above this 200 week moving average though, even if it's a wick below it and we get back above it and we retest and we bounce, there is potential for upside continuation here still, especially if, like I was showing with the dollar index, if that's going to continue lower and this is going to continue to bounce, there is potential for a melt-up scenario still, as long as we're above the 200-week moving average, depending obviously on what the central banks are going to do, what the FOMC decision is going to be next week, and so on and so forth. So that's a developing story, but basically set some alerts over here. At this point in time, we don't want to see a weekly close below 3,700 on the S&P 500. If we get that, we have to start considering a more bearish scenario. Now, one thing that I wanted to point out again, I have pointed this out before in previous videos and in my members-only newsletters and things like that in VIP, rate cuts tend to lead to major market sell-offs. Okay, so that is important to know. You can see overlaid here in 2000, the first rate cut started after a hiking cycle, and we got a major sell-off in the stock markets. You can see over here the same thing in 2007, within 6 to 12 months of the first rate cut starting, massive sell-off over here. In fact, it even happened here in March 2020. We got rate cuts after a hiking cycle, and we got that crash. So far, we have seen interest rates only increase so far, in the fastest pace of 40 years, by the way. So that is a little bit alarming, but we still have not had a pause or a cut, which means that we might not, according to this data, we might not see that crash until 6 to 12 months after the first rate cut. So that is something that I'm very much keeping an eye on. The moment they actually make the first cut, after only raising for months and months now, that is when we have to start being careful that within 6 to 12 months after that first rate cut, that we could be seeing a major market crash, which leads me to believe that there is a potential scenario here where we only continue to rally for the next 12 to 18 months, all the way past the Bitcoin halving from now until middle of 2024. Then the rate cuts happen sometime this year, maybe towards the end of the year, middle to end of the year, which means that by the middle of next year, we could be seeing a major market crash. But in the meantime, if Bitcoin went to new all-time highs before then, up to the halving or a little bit after the halving, then, you know, that would be great if you're positioned for it. And I think that would be something which people are not quite expecting. I don't know if it's going to play out that way. It's a potential scenario. We have to take it week by week, month by month as it develops. But something again to keep in mind, that if it starts to look like that, then we have some sort of guidance or some sort of roadmap of what could lie ahead. And obviously, if it gets close to that, I will actually make an update and share that with you guys here. And finally, let's just have a quick look at the Dow Jones Industrial Average weekly chart. Same with the 50-week moving average in blue, the 200-week moving average in red. We want to stay above the 200, so set some alerts here. We don't want to see a weekly close below, say, 30,500 on the Dow. If we get that, things start to look scary, and potentially we have to consider a crash scenario. As long as we are above the 200, though, you know, anything can happen. We're looking for bounces over here, so we'll have to wait and see what is the FOMC decision going to be next week. What is the central banks? What are they going to do? And as long as we're above here, we're just looking for a bounce. Hopefully, get back above the 50 blue to get back in full bullish territory, and potentially still a continuation to new all-time highs before another 2008 style crash. I'm going to wrap it up right here because this video is already long. If you enjoyed this video, please smash the like button, subscribe if you haven't subscribed yet. Leave a comment. What do you think? I would like to know, because I'm always just sharing my opinions here. If you think something differently, or you have some other information you'd like to share, or you want me to make a video about, or you disagree with something, please feel free to leave a comment. Thanks for watching. I wish you a great weekend if you're watching this on the weekend, and I will see you in the next video.